Visa and Mastercard. These are the two massive blue chip fintech giants that we're going to be talking about in this video, because I truly believe that we are starting to see some good value in these behemoth safe companies. Over the last 6 months, these stocks have hit some turbulence, but in the last week especially, they took a nosedive lower while the broader market continued to new all-time highs. And this kind of divergence between these stocks and the overall market is what got me interested to look into these companies once again, because there may be an opportunity here. Now, full disclosure, I do own a Visa stock in my personal portfolio. I don't own any Mastercard as of right now. However, it gets me asking the question, is this an opportunity to kind of accumulate some more shares? Are these stocks undervalued, or is this kind of just like a trap here for a more long-term change in the market where these type of companies are not going to be as relevant in the future? Well guys, in this video we're going to dig into all of that, look at the fundamentals, look at some metrics here to help us determine, are these stocks a buy at these prices? And if you appreciate this kind of content on the channel, all I ask in return is hit that like button. It helps tremendously, and subscribe to join the community. So starting with Visa, this name is down over 15% from its highs, but intraday it's down even lower, as we'll see later. Mastercard, very similar story as well, down around 15%, but again, intraday is down even lower. And these stocks, guys, if you noticed and you follow them over time, they kind of move in tandem. If one moves down, the other moves down. If one moves up, the other one typically moves up, and they kind of follow a very similar pattern. And that's because they're very similar businesses, similar industries, similar offerings. They're very similar companies. And both these companies generally trade at a fairly good premium to the market in the 40 PE range. And at first, this may seem expensive, but if you think about it, it's really not. It's really important to understand why these multiples are higher than the market. If you looked at the PEs of these companies 10 years ago, you'd probably would have been like, it's too expensive, and passed on them. Meanwhile, these stocks have gone on to perform extremely well over that time period. So I think it's important to take a step back. Don't just look at the PE for, a number and then base your decision on that with no context. Understand why the market is valuing it like this. On top of that, we also need to look at their forward PE, because that's kind of what the market is predicting that their value is going to be in the next year or so. And that gives us good indication of whether this company is going to become even cheaper or even more expensive in the next year. Now, in my opinion, the reason I think these companies are, expensive versus the broader market is because they're such high quality businesses. They have really no customer concentration. They're global businesses. They have very low risk on their balance sheets. And they have incredible free cash flow generation and growth over the years. Just look at the amount of free cash flow these companies produce annually. It's in the billions, and this just shows how well of an underlying business both Visa and Mastercard are. And while this free cash flow just keeps growing over time, the growth has also been very strong. Double-digit growth has been pretty consistent, 20% plus. And the market sees this and they're like, an incredible business like this growing that fast with such good fundamentals, it's worth paying a premium for. But here's the interesting thing. Even though the last decade or so, these companies have just performed extremely well on a fundamental level, that doesn't stop the market from throwing tantrums on Visa and Mastercard every so often. These tantrums result in a sell-off, a correction in these stocks, and have always proven to be buying opportunities. Here is Visa's chart over the last few years, and you can see that there's been many corrections in that time period, in that 18 to 20% range. And obviously March 2020 was kind of an outlier, was an even bigger drop as the whole market dropped. But the interesting part is right now we're seeing pretty much this sort of regular correction once again in Visa. Mastercard, no different here. As I said, they move very similarly. However, it is more volatile than Visa. They have drawdowns kind of ranging between 23-24% on average. And the most recent drawdown that we've seen last week is around 19%. So, I wanted to show you these charts because I wanted to let you know that these drawdowns in these stocks is very normal. It's something we see every few years. And it isn't something to be necessarily alarmed about. It's just the market correcting. It's just these stocks pulling back here after having a good run. And it's just part of the cycle. The interesting thing, though, is that I've noticed that, this time around the narrative is a little bit different than it has been in the past, which is, of course, drawing a lot more fear and uncertainty from investors. The two main things investors are concerned about right now with Visa and Mastercard is, first off, competition, a different type of competition coming into the space. And second off, slower growth that's expected in the next year. Both companies reported their earnings last week. Both companies reported pretty good numbers, but they did disappoint the street with next year's growth not being as strong as initially expected. We can see the acceleration of growth they saw in the last few years and the huge drop off after 2020, which, is understandable. But what Wall Street sees here is it doesn't look like it's getting back to that trend that we were at before. You can see that red line there. So that's kind of where this uncertainty and fear is kind of coming in. So I think it's clear. It'll take time for these companies to get back on their feet completely to the point where they're growing like they were prior to 2020. But I think the key takeaway that a lot of people are just overlooking is that they are still growing and they are still great businesses. Am I concerned with the growth here slowing down? Not really, because when I see these companies on a global scale and I see the quality of the companies here, I know that 2020 just made them stronger businesses, more efficient businesses, and those tweaks that they made in 2020 will see massive returns over this next decade. Now, the other concern, guys, that we're seeing a lot here with Visa and Mastercard is competition, particularly with the buy now, pay later movement that we've been seeing and also the crypto movement. Investors are now second guessing whether, Visa and Mastercard can keep up with their traditional business of their network and their fees when these alternatives are out there offering, cheaper options to consumers at the end of the day. For buy now, pay later, the argument is, why would you use a credit card to accumulate a ton of debt on there and pay massively high interest rates, like 20% plus, when you can just use buy now, pay later, split the payment up over a period of time, and not worry about any interest fees? And that's a good point, it's a good argument. However, there's a little bit, misunderstanding there, because with Visa, Mastercard, you can keep making purchases even if you have outstanding payments and debt on there. Whereas the buy now, pay later platforms, they take on a lot of risks. So if they see that you don't make a payment, they cut you off, and that's the end of that until that payment is made. So it's not necessarily the best model because it doesn't really allow the consumer to keep spending, which is where Visa and Mastercard will just keep making money. Also, with Visa and Mastercard's business model, they do not take on the debt from these transactions, unlike these other companies. Visa and Mastercard, they just facilitate the payment. That's it. They allow the merchant to use the network, the consumer to use their card, and everything's just done over the network. Visa and Mastercard take a fee there, small percentage, and that's how they make their money. There's no debt accumulated. They're not taking on the risk from the customer or anything like that. And that's, I think, a huge appeal for their business model. But nonetheless, buy now, pay later is a new movement that consumers like. They're adopting. And Visa and Mastercard have taken notice of this. And even though it may not be the most profitable move for them going forward, they know this is something they need to address and compete with. Visa is going to launch a buy now, pay later option where they do the exact same thing as Afterpay or Affirm by splitting the payment into multiple payments with no additional interest. And Mastercard, guys, is essentially going to be doing the exact same thing, offering buy now, pay later to their customers as well. So now with, these behemoths, Visa and Mastercard taking buy now, pay later seriously, offering a unique way to do this for customers, doesn't really give Affirm, Afterpay, which is Square soon, a competitive edge in this market. In my opinion, no. But it's still kind of early. We'll have to wait and see if these offerings from Visa and Mastercard actually do pick up steam. I think they will because they already have the consumer using their card, so it's easier to get the consumer on buy now, pay later if they wanted to. And I think if we start seeing a lot of traction with this, media is going to pick it up. We're going to see a lot of positive sentiment come back into these stocks, and they're probably going to make new all-time highs. Now, the second argument that I mentioned that a lot of bears here are bringing up is crypto, the blockchain specifically, kind of eliminating the need for Visa and Mastercard's network. The argument is that merchants are going to be able to use blockchain to kind of avoid those fees, and they wouldn't have to pay Visa and Mastercard anymore for that, so their business model becomes irrelevant in that case. So, for this, it is a legitimate concern. However, it's a long ways away, in my opinion, if the world does adopt that. And Visa and Mastercard do recognize that crypto, blockchain, this is something that is going to eat into their market sooner or later. So they are making moves now to kind of adapt to that. But one thing I want to bring up to you guys is how many people go out there and actually pay for something, a Big Mac, for example, with cryptocurrency. I don't even know if McDonald's accepts that. I don't know if many merchants do. Over time, they probably will accept crypto. However, it's a long ways away from adoption around the world, guys. So to be concerned about that today when these businesses are still thriving, doing a ton of things to add value to their company, I think it's a little premature. So I think it'll take a long time to get consumers to replace their traditional credit cards and use, specific crypto cards that go through the blockchain and all that kind of stuff. And we're not going to see that, I don't even think, in this decade. But that being said, this could be something we see sometime in the distant future. Visa and Mastercard are making moves right now to make sure that they're positioned to take advantage of that if that's something that consumers want. Mastercard recently bought a company in the crypto space for analytics, and they partnered with Backed to offer consumers crypto as their cashback method when making payments, which in my opinion is a huge step forward for crypto as a whole here for mass adoption. With Visa, you have them partnering with arguably the biggest and most important company in the crypto space, Coinbase, by offering a Visa debit card for consumers of Coinbase. The card allows customers on there to use their crypto anywhere that they want that Visa cards are accepted. Both companies are seeing this as a possible opportunity to expand their business, have another kind of stream of income, cater to that market, cater to those customers, and that just shows how quickly their management is able to spot trends, adapt, even though they are such behemoth companies. That, in my opinion, is impressive. There's still a lot of hurdles to overcome. Visa and Mastercard have a lot of work to do to actually be number one in this space if they want to. And that's, I think, where the kind of doubt comes in from investors. Are they going to be able to do that? Will they be able to keep up with competition? All that kind of stuff. So now, the most important question in this video, are these companies a buy today after their corrections? Well, early in this video, we saw that these companies generally are around a 40 PE. But, with this correction, PEs are going to come down, especially the forward PEs. So let's take a look at what these companies are looking like for next year. Mastercard is sitting at around a 32 forward PE, which is a good amount lower than its historical PE. And Visa here is looking at just under a 34 PE by next September, dropping to a 25 PE the year after. So if you're a long-term investor looking a few years out, you're getting these companies at traditionally very cheap valuations compared to what they're usually trading at. I think that all these headwinds with crypto, competition, buy now, pay later, all this stuff is just adding an opportunity for long-term investors to buy into these massively successful businesses that'll just keep generating a ton of cash flow over the long term. I strongly believe both of these companies will be able to adapt and position themselves in the new age of finance, whether that be through crypto, whether that be through something else, NFTs, whatever it is. These companies, I think, will find ways to make sure that they are still dominant. Am I doubting that the future is buy now, pay later? No, I don't think so. I think that is actually a very smart way to get consumers to spend more. If you could split payments up over a period of time without paying interest, sure, why not? So I think that's definitely a future component for finance. Now, am I doubting crypto? Do I think it's a fad? No, I think that's also a legitimate concern and something that will definitely be a factor in the future. But what I am doubting, guys, today is the market's concern and discounting these stocks because of the possible fear that they may not be able to compete in these spaces. And honestly, I just think it's a buying opportunity here. Remember, both strong companies, both strong brands, worldwide, huge moats, and excellent management teams that have produced massive free cash flow and dividends to investors. Guys, let me know in the comments down below if you agree with me. Do you believe Mastercard, Visa are buys today? Love to hear your thoughts in the comments down below. But either way, thank you so much for watching, guys. Again, hit that subscribe button if you want to see more videos like this. But either way, I'll see you in the next one.